Welcome back. I'm Jeremy Szafron. A major rethinking of sovereign reserve policy is underway, and Germany helped spark it. Now, for decades, most central banks stored their gold abroad, with the U.S. Federal Reserve Bank of New York acting as the de facto global vault. But that changed over the past decade when Germany made the historic decision to repatriate 674 tons of gold from the U.S. and France. Now, as one of the most significant assertions of monetary sovereignty in the post-Bretton Woods era, and the official reason? Trust. But the real message was louder. Even longtime U.S. allies had begun to question the security of foreign gold custody. And now, in 2025, that shift is picking up speed once again. A new global survey from the OMFIF shows 70% of central banks say U.S. political instability is discouraging dollar holdings, double the level from last year. Now, 1 in 3 reserve managers plan to boost gold allocations in the next 2 years, and over the next decade, 40% expect to increase gold reserves even more. Now, the euro and China's yuan are gaining some ground, but gold, a non-political zero counterparty reserve asset, is emerging as the big winner in a world fractured by tariffs, geopolitical risk, and fading trust in the dollar system. Now, joining us is someone who helped set this movement in motion. Peter Boehringer is the member of the German Bundestag. He's also the former chair of the Budget Committee. He sits on that committee right now inside of the parliament. He's also the driving force behind Germany's gold repatriation, and today remains one of Europe's leading voices on sovereign reserve policy, fiscal governance, and of course, sound money. Peter, welcome. I understand you just stepped out of the Bundestag vote. We appreciate you making the time with us today.
Well, good afternoon from Europe and good morning to Canada, Jeremy. Thank you for having me.
Good morning. Good morning to all of us over here. Like I said, you've been busy over there, and I kind of want to begin with this Germany's repatriation campaign. I mean, you were the one behind it, the return of 674 tons of gold from the U.S. and France between 2013 and 2017. And of course, that was one of the largest physical gold transfers by a major economy since Bretton Woods. So let's start with the basics here. I mean, what drove that decision, Peter? Was it primarily trust, accountability, or something even more structural?
The story behind the repatriation campaign here goes back quite a little longer. Mm-hmm. Most of your audience will probably remember Ron Paul's Audit the Fed campaign in, I think, 2005. Mm-hmm. It's been at least that long that in our community, repatriation and the value of gold at home as opposed to abroad, and the value of a non-compromisable reserve asset like gold has been discussed. And it was in 2010 that the balance sheet of Deutsche Bundesbank and of European Central Bank deteriorated for several reasons, mainly the financial crisis at the time and the assets, the bad assets that were bought by the central banks here in Europe. And we were worried that ultimately Deutsche Bundesbank would count out or balance the losses with physical gold. And that's why we wanted to have it audited in Germany. It had not been audited at the time in Germany at all. And especially abroad, it was not audited, and we wanted to have it back. And that was the trigger back already in 2010. And it took 5 years to really get significant knowledge about the whereabouts of our gold. Nobody knew anything about the status of our gold at the time. And finally, we got something back. Today, there's half of Germany's gold back in Frankfurt. It's only half, so we're working on the other half.
Working on the other half, keeping up the good fight. You know, Peter, at the time of Germany's decision, the Federal Reserve Bank of New York was holding more than 6,000 tons of foreign gold, more than any other institution. What concerns did you and others in Parliament raise about risks of relying on foreign central bank, even a close ally?
It's good that you say a close ally. I think the US still are a close ally. We are not against Trump. So the reason to bring the gold back is not American presidents, to put that in a current perspective. It's not Trump that gives a reason to repatriate gold. The reasons are decades old. Actually, the gold was brought on our books during the 1960s in the course of the Bretton Woods system at the price of $35 per ounce. It was booked on our books. Ultimately, we were talking about 4,000 tons that had already been on the German book around 1967. And nobody knew the status. Personally, I believe that it never, ever materialized. It was just book entries for decades. And it was only when we wanted to have it back that new bars were cast, and they were actually cast. The bars we received in 2013 had a melting date and a casting date of 2013. So we didn't receive the original bars from the 1960s, which we should have received.
Wow.
So there's a lot to talk about here. 6,000 tons, you say. I think nowadays it's even 8,000 tons that foreign gold that lie in the New York vaults. Something like 37 nations believe they have their gold safe in New York, but nobody knew 10 years ago, 15 years ago, and actually not even today, whether any single bar belongs to just one single person or institution who believes they are the single owner. And secondly, well, it's not even 100% certain that everything is there in place physically. So quite time for an audit. And if you want to make it absolutely certain, you will have to repatriate it. It has nothing to do with distrust against the US or against any president. We're talking about, I think, 12 or 13 US presidents since the 1960s. John F. Kennedy, who was the first one who significantly got the US in debt after the World War II, and it never changed since then. So that is the main reason. In a world full of debt, you have to have an uncompromised reserve asset, and that is gold, and we would like to have it on our own soil. And the same applies for so many other nations. When we started, I think we were the second nation after the US themselves. Ron Paul audited the Fed campaign. Today, it's, according to my counting, around 15 nations that have repatriated or at least are planning to do so from America or from London.
Yeah, we're going to unpack that, but I want to go back because you said something interesting there. Just to clarify, Germany didn't get the original bars back, correct? I mean, the Bundesbank received different gold bars recast and recertified?
Well, personally, I do not even believe the recasting story. That's the official story that Deutsche Bundesbank tells. Yes, we had the gold, we received the original bars, but we recast them somewhere. There's no proof whatsoever that, that this happened anywhere. Personally, I believe that the New York Fed just bought gold, physical gold bars in Europe from the market in Europe and had them sent to Frankfurt. That's what I believe. I can't prove that, but Bundesbank never proved the opposite. Materially, obviously, it doesn't make a difference whether we received old gold bars or new ones in 2013, because gold never ages. Obviously, it never rusts. But, well, historically, it's very interesting that the gold obviously was not there. And this was what conspiracy theorists, so-called conspiracy theorists, claimed for decades, but could never prove. We have quite indications that we were right.
Interesting. Okay, so obviously that raises some real questions at the time. I mean, not just about custody, but about auditability. Some even pointed out that Fort Knox hasn't had a full independent audit in decades. From a transparency and accountability standpoint, doesn't that strengthen the case for keeping gold at home, where it can be verified and secured under national control?
Yeah, absolutely. And it's not somebody who said that. We have historical records. The last show audit, I really call it show audit, in Fort Knox, which is obviously something different than the New York vaults. So the Fort Knox audit happened in 1974. We have some old pictures that were taken for and by, well, really government near journalists. There was no audit conducted at the time. The last real audit was conducted in Fort Knox in 1953. We have some records about that, but you could even go back to the 1930s after Roosevelt confiscated the U.S. Gold, and that constituted the initial gold reserve of the U.S. That there was a real proper audit. That's the 1930s. We're talking about that long ago, almost 90 or 100 years ago. There is no proof after that, and no records that anything else happened after that. Obviously, the U.S. received quite a little more gold during the World War II. So I think, from my knowledge, it was in 1944 at something like 20,000 tons that the U.S. gold reserve peaked.
Okay, I got to ask you, because obviously, you know, we've been talking about Fort Knox. It's back in the news. If you pick up a newspaper right now, people are talking about gold repatriation. Fort Knox holds more than 147 million ounces of U.S. gold reserves, over 4,500 tons. But again, there hasn't been that full independent audit since 1953. More than 70 years ago, Treasury says it conducts inspections, but those are internal. They're not transparent for the public. For critics, obviously that raises big questions. If even the U.S. won't submit an independent verification of its reserves, why should other countries trust its custodianship? Doesn't that fuel the global push for this whole, onshore control that we're seeing right now?
Currently it does. It should have done that earlier, of course. Yeah. I think that the announcement by Musk, by X, it was just a very short answer of his to Rand Paul on an X statement of Rand Paul. He said, or he wrote, let's audit the US gold. And Elon Musk, I think that was already in February, just answered, yes, let's do that, even January. Everybody then expected, oh, it's happening now. Nobody knew exactly why. My personal explanation is Trump and Musk knew from Trump's first term that maybe something was not in order in Fort Knox, but he couldn't tell the world public outright. So he just did an indication, we're about to do an audit, so you better get the gold, the missing gold, if there is missing gold, to the US. Yeah. And since then, to my knowledge, it's more than 2,000 physical tons have been transported from Europe, Switzerland, and London to the US, which is extraordinary because the US rarely imports that much physical gold, and they did in the last 16 or 18 weeks since inauguration. So that's interesting. And still, the audit has not happened. That's more than 3 months now. So we have to see what's happening. Yeah. But I think that's the way Musk and Trump told the market, you better repatriate or you buy the missing gold, because we obviously cannot afford to tell the world the gold isn't there fully. I believe the day when the audit will come, the gold will be actually there. But interestingly, it's not only Fort Knox and the managers there, but it's, I believe, physical ETCs and ETF managers and maybe even private persons that also said, okay, something seems to be going on. We better get physical, which in the US didn't happen for decades. The US has no record whatsoever. Everybody is dealing in paper gold there, and that is changing now.
And, Peter, I mean, we're starting to see it kind of wake up, these efforts. And to your point, I mean, the Bundesbank said at the time that there was no lack of trust, but clearly something has changed. Since then, Austria, Hungary, the Netherlands, and Turkey have followed suit with their own repatriation efforts. Do you believe that there is now a kind of sovereign gold movement unfolding, your efforts finally paying off? Or is this still viewed as a fringe issue in most capitals?
We had quiet times, but already in 2015, when I wrote this book regarding our repatriation campaign, I had to edit 15 sub-chapters with repatriation efforts ongoing, or at least demands from some parties in some countries. So this is ongoing and has been, but it's a quiet move. Nobody talks, and no gold buyer likes to talk about his gold buying, especially not China, who probably have bought almost as much as the US have, but they are not talking about it. And I think the official number they are announcing is 2,000 tons, as opposed to the probably 8,000 they have. Gold buyers are a silent clientele.
Yeah. Well, I mean, we're seeing that central bank rotation too. I mean, I referenced this new survey from the OMFIF, and they're saying 75% of banks shows a sharp increase in the demand for gold. As you just mentioned, over 30% of reserve managers say they plan to raise gold holdings in the next 2 years. Over the next decade, it jumps to 40%. The dollar, once the most favorite currency in these surveys, now ranks 7th. So do you see, do you think that we're seeing the start of a systemic rotation away from the US dollar, or is this more of a parallel buildup in non-dollar reserves?
I wouldn't have said that 2 or 5 or 10 years ago, but we actually are seeing something like a structural shift. Almost at the same time as this, I think, OMFIF report, European Central Bank published a survey as well, where they announced, the dollar is losing its share in international central bank monetary reserves, going down from, I think, 44 to 40%. Same for the euro. So it's not the euro that gains, but it's gold. And the gold share is now again at 20%, which it hadn't been in decades. So gold is at least implicitly moving back to its old almost monopoly reserve status, which it had been up until 1971. Don't forget, up until 1971, almost 100% of the central bank reserves were in gold, because all currency reserves were actually nothing else but derivatives of gold. And now we're down to 20%, but we had been down to 10% 10 or 20 years ago. And now, both because the central banks have been buying, and because of the price increase, obviously, this has gone up to 20%. And I think it's going up to maybe 30% in a few years. And then ultimately the market will believe, well, will gold become the leading monetary asset again? This is nothing that happens overnight. It could happen overnight, because the opposite obviously happened on August 15th, 1971, when all the world demonetized in one single day. But this time it might take a little longer, and it may be a slow process. And I think that is happening. It is a structural shift. It is a secular shift, and it's still beginning.
Yeah, interesting.
My personal opinion.
Yeah, well said, Peter. I got to ask you, I mean, because in the 1970s, the U.S. closed the gold window, and then in the 1920s, it seems to be weaponizing finance through sanctions and asset freezes. Is physical gold accumulation and repatriation the only credible hedge against that politicization?
Well, you can never say it's the only hedge. But given the fact that, at least in Europe, fund managers have less than 2% of their assets in gold or silver, and that includes paper gold already, I think. There is quite some room for diversification into real assets. Of course, you can put something in real estate and shares, which to some extent are tangible too, tangible assets. At least they represent tangible assets. And of course, in normal times, it is more attractive to have an asset that yields, that gives you some yield, and gold doesn't give you a yield. But we do not have normal times. These are not regular times. We are in the end game of a very, very old paper experiment, which is now in its 55th year.
Talking about paper experiments, let's continue down that path and talk about the euro's ambition, because the same OMFIF survey shows that a net 16% of central banks plan to increase euro holdings in the short term. Some believe the euro could reclaim a 25% share of global reserves by the end of the decade. Does the euro have a real shot at reserve parity in your view, or is it too fragmented given the lack of, unified fiscal and capital market infrastructure?
I must say, politically, even before I became a politician, only at the age of 47, I was against the euro. I was a critique of the European Union, and especially of the euro, because the euro has two main deficiencies. The first is it is fiat money. Well, okay, same for the dollar and for all the others. But then it's a basket currency, and basket currencies historically never work in the long run. So personally, I do not believe in a stable euro. And obviously that's correct, because purchasing power-wise, the euro has lost 92% of its purchasing power since its inception in 1999 against gold, against the only real asset. Of course, you can say it is a historical coincidence that the euro was brought to life at the very bottom of the gold price, but the euro is not a stable currency. Just today, I came from a meeting here in the parliament, and tomorrow I will have to talk about a new Eurozone member, which is Bulgaria. Well, it's a country which we normally would not have admitted. It's a very, very poor country. But I must say, this time, I can't even argue against accepting Bulgaria in the Eurozone, because even though its economic data is very bad, it is better than the European average. So it will not make the euro purchasing power deteriorate. What can I say? If you have two currencies, like the dollar and the euro, that are completely in debt, and the countries behind that, and they go down in purchasing power against gold, more or less at the same speed, their respective exchange rate does not change a lot. So actually, you don't see at face value the deterioration of the purchasing power if you just compare the euro-dollar exchange rate, which interestingly didn't really fluctuate too much in the last 30 years. But against gold, it's a completely different story.
Yeah, it sure is. Okay, well, then we have to talk about Germany's fiscal position, too, because you've long been an advocate for fiscal restraint and, as you just mentioned, sound money. I mean, Germany's debt brake was kind of enshrined in the constitution, but has been suspended multiple times in recent years. Are we approaching a point where even Germany loses its reputation for fiscal prudence?
The easy answer is yes, absolutely. Yeah. Just yesterday, the new German finance minister, a social democrat, together with his conservative partner, introduced the budget for 2025 and 2026 into this house, into the Deutsche Bundestag. And again, we have an absolute record in new debt. It's going to be 85 billion euros per annum. So that's 170 billion dollars for the next 2 years. Incredible amounts that would have been impossible, but we changed the constitution 4 months ago, so this would be possible. And it is not, the money is not being spent on, on reasonable investment positions, but it is unfortunately being spent on debt payments, which are completely non-yielding, of course, and on weapon purchases, because unfortunately we are intermingling and interfering in all sorts of wars, especially in the Ukraine-Russian war, and a war is always very expensive, and so-called war or weapon investments are no investments, because you never get a yield out of that unless you are a weapon producer. From a national perspective, the yield, there is no yield you get from a weapon investment. It is just a cost position, because the best case is the weapons will not be used and they do not yield anything. And the worst case is they will be used and then it's value destructing anyway. So war is always bad, with the possible exception of a few warmongers who invest in it.
I got to ask you, because at the same time, the ECB's balance sheet remains over 7 trillion euros with renewed calls for fiscal transfers and even these joint debt issuance. Peter, you've said yourself, as we just communicated there, that Germany is no longer fiscally prudent. But given that shift, should Berlin now be increasing its gold reserves, not just to hedge ECB debasement, but to restore confidence in its own balance sheet?
well, I've been advocating that for years and many years. Yeah. You can go back as far as 1967 when Germany stopped buying gold on its central bank balance sheet. We had those 4,000 tons at the time, which I mentioned in the Bretton Woods systems. Had we continued to buy gold, not of course at $35 per ounce, but at the current market rate since then, with the market surpluses, the trade surpluses the German nation had almost always since then. Then I did a calculation the other day. We could have bought all gold reserves that are currently in existence, more than 200,000 tons. Obviously, that wouldn't have been possible because the price would have exploded. Yeah. But it's that much we could have, and obviously it would have been a much better investment than anything else we did with the money. And the same applies for other countries with trade surpluses, Japan for many decades, and China. But actually China is doing it, so they are wiser. We don't know how much they bought.
I got to ask you, I mean, as a gold bug, you're going to hate this as well as my audience, but it is topical in this day and age with Trump in the White House and the crypto kind of community, talking about, a few reserve managers, particularly in emerging markets, are starting to kind of explore Bitcoin as a parallel hard asset. Obviously, it's not state sanctioned like gold, but it is kind of borderless in custody differently. Do you see a role for sovereign crypto reserves in the future, or is that compatible with central bank policy?
That's a very long discussion. Personally, I have nothing against that. It is a freedom story behind the story of Bitcoin. Some people say it's a freedom currency because there is no national or state connection here. It is not emitted by the state. So let's promote that. And so I do. I am a libertarian. I accept that. Having said that, I'm also a gold bug. And we as gold bugs believe in tangible assets. Bitcoin is not a tangible asset. Actually, it is just the solution to a formula and nothing else. And the value is either the energy which you needed to perform that calculation to actually calculate one Bitcoin, or it is just the idea, okay, there is no inflation possible, and one day Bitcoin will become the world currency #1, and then we will be at prices of 10 billion per piece, which to me is not conceivable. I don't believe in that because you need in order to have a stable world currency, you need to have a story behind it. And the story behind gold is a 3,000 or a 5,000-year-old story. It is, of course, irrational. Gold has no value. You can't eat it. Same for the dollar and same for a Bitcoin. So there's no difference here. But it has worked. That's the main reason people know it has been working for thousands of years. It's working today, and it probably will work 1,000 years from now still. And the Bitcoin, with its 15 years history, has not yet proven that. So I have nothing against the Bitcoin, and maybe for diversification reasons it's okay. I do not believe that it will at any certain time and point become the #1 world currency. And well, when it comes to reserve asset for central banks, it will not be possible either. Just do the calculation for gold. The US gold reserves are 8,000 tons or 250 million ounces. Just imagine you would double the price miraculously or by planning, and the New York Fed would say, okay, gold is worth $7,000 as opposed to $3,000 now. Right. That would free up $1 trillion in assets. 250 million ounces times $4,000. It's only 1 trillion only. The US has 37 trillion in debt, so I don't think it will be possible to really equal or equalize or finance the U.S. national debt by upvaluing gold. It will not be possible unless you upvalue it to at least $160,000 per ounce, which is really hard to imagine now. And when you do the same calculation for Bitcoin, it's even more insane. The Bitcoin would probably have to go to $1 billion per piece in order to make a significant difference. To me, that is beyond imagination.
Yeah, and to your point, I mean, gold is the only one with a 5,000-year track record as reserve collateral. Let's go back to custody, Peter. As of 2023, over 50% of Germany's gold is now held in Frankfurt. The rest is split between what, New York and London? Do you believe all of it should be obviously brought home eventually? And what does that look like?
Yes, I've been saying that for 15 years now. It didn't work out in 2013, but it was a huge success. It was actually a sensation. Nobody could believe that Bundesbank was actually moving and repatriating because of our initiative. Actually, they never admitted that. We established the pressure, the public pressure that was necessary to make Bundestag move and put pressure on Deutsche Bundesbank. That's the way it worked at the time. Today, I am a member of parliament. I had not been a member of parliament at the time, but now I am. So I have a direct connection into Deutsche Bundesbank. I'm talking to the executive board quite a few times a year. And they still have the same story. Well, we do not want to bring more gold back. And that's a quote now, because we, in a time of crisis, we need to be able to exchange our gold in London or in New York against British pounds and US dollars, which is ridiculous because firstly, you can exchange gold from everywhere into paper currency if you actually want. And especially in times of crisis, you do not want to exchange it into paper currency. That's exactly when you want to keep your gold as it is in physical form. So I don't swallow the arguments of Deutsche Bundesbank, but they haven't changed in 12 years now.
So Parliament, you're still working on them. They haven't changed because, I mean, given what's unfolding globally, trust erosion, politicized currencies, there's even talks of BRICS, gold-backed settlement. How much longer can Berlin afford to lag behind?
Well, Deutsche Bundesbank is unfortunately not independent. They claim officially to be independent, but that's false for several reasons. First, they are just a subsection of European central banks. Since 1999, Deutsche Bundesbank cannot act in their own right. They have to do what Brussels actually, it's Frankfurt too, what the ECB bosses say. Secondly, central banks are never completely independent from politics. Because politics guarantees their very existence. So to some extent, both in the US and Canada and here, the central banks have to do what the politicians say. It works the other way around too, because politicians sometimes have to do what the central bankers say because they can print the money they need to survive. But it's really a symbiosis between the two. Right. So there is factually, there is no independence of central banks, but that's the official narrative they're telling the public. We are independent, and so even Deutsche Bundestag, which is the executive branch, has no official power to make Deutsche Bundesbank do anything because they are independent.
Right. So doesn't that undermine the credibility of the Eurozone monetary policy even more broadly? Because if the largest economy in Europe has a central bank beholden to government agendas, I mean, it's the same thing we're talking about here.
Yes.
Yeah. Okay, I got to ask you, is there a case for a new European gold depository, something independent of the US and UK systems?
Well, I just don't know. Officially, I know of no such plans. And if there were such plans, they would never admit it, because once you admit that, there would be an incredible stampede into gold by everybody. Because as soon as gold officially gets some official currency status again, everybody will want to have it. So they have to avoid that very impression at every cost. You and I will never be the first ones to hear about that. And personally, unfortunately, I do not believe that this is happening. They want to print their way out. Governments they hate the gold standard, be it implicit or explicit, because they can't go into debt anymore. And there are 2 or 3 generations of politicians who do not know how to govern countries without debt. So I do not believe that's happening. We will have to have a crisis, which an inflationary crisis probably, that will bring about factually some sort of monetary character of gold again. It's not the politicians who will bring it about.
Right. Okay, well, I got to ask you, I mean, what does that look like in the path forward? If we look ahead to, say, 2035 and the dollar share of reserves drop from 58% to around 50% as projected, I mean, what kind of a world are we living in? Is it more stable or is it more fragmented?
What can I say? If you look at the speed the world is changing, especially here in Europe, and it's not changing to the better, and at the wars and the crisis all over the world, I'm not too positive. There's an old saying in the stock market, put 10% of your money in gold and hope it doesn't work. And well, it is working now. So something has happened which we were not hoping for.
What does the role of gold look like within these high prices? I mean, we're sitting here talking about central banks accumulating gold at $3,300 an ounce on the spot side. That's going to continue at these prices too, your thoughts?
Obviously, there are so many drivers for the price of gold. There is mining output, there is central banking buying or selling, there is technical signals, fear, greed, the usual cycle, geopolitical events, diversification, ideas of the fund managers. There's crisis, there's wars. But there's only one thing in the very long run that drives the gold price, and that is the quantity of money, paper money around. I can't predict. I believe the can will be kicked down the road as long as possible. But yes, ultimately it will no longer be possible. They will want to gain time. But I think on the way there, gold will continue very volatilely to rise, and at a certain point in time, the powers in power or the governments in power will have to decide what they do. And we have had so many events in history that the ultimate trust in paper currencies has just was just exhausted. There was nothing left, and then they had to change it. Unfortunately, there's one option that had not been available in history so far, and that is police states with complete surveillance of every person and all the assets. And then you can, of course, tax them. You could even confiscate them. That's a different world. It's a police state. But well, as Goldbugs, of course, we have to fight against that. That's why I became a politician, to fight against those tendencies. But so far, we're ahead of things. But if the powers really become desperate, they could find desperate measures.
I got to get your opinion while I still have you too. You've been an outspoken critic of central planning and monetary policy, but Germany is participating in this ECB's digital euro project, a kind of potential Eurozone-wide CBDC. Talk to me from your view. I mean, is this what they're masking as efficiency? Is this privacy concern? What are your thoughts on the CBDC?
It's yet another topic where you could talk all evening.
Yeah, I could too.
We're against the central bank digital currencies. The first and obvious reason is there is no demand for it. Nobody is waiting for the central bank digital currencies. We have had electronic payment formats in 40 years. Since the 1980s, you can do electronic payments, and it's become very convenient. You have all sorts of bank platforms. You even have private platforms. There is no need for a central bank digital currency. But the only exception of those central planners, which I just talked about, of those paranoids in power that want to survey and obey everything and everyone. And they want to know who has something, who transfers money to whom. And they want one central bank, which is the central bank of a nation, or maybe ultimately even a global central bank that has the ultimate overview of everybody's wealth and every transactions, which is a nightmare. It's dystopian for everybody who has some freedom sense, but maybe that's they're planning for. And Deutsche Bundesbank and ECB have currently, interestingly, the problem that they too cannot explain who needs this idea. There's a pilot project going on and has been ongoing for 3 or 4 years now with the digital euro, but it hasn't been really gone live yet. There's talk about it going live this autumn, this fall, but I'm not sure if it's going to happen. The banks, not the central banks, but the other banks are against it because they fear that their business will be cannibalized by the central euro. So there's quite some obstacles, and I'm happy about that because the longer it takes, the better. It is not a good idea to introduce central bank digital currencies. And I didn't even talk about programmable digital currencies, which would put the central banks and the powers behind it in a position to govern into everybody's life, to steer what we can do with our money. And they could even switch off everybody from financial transactions. They could even starve people if they wanted with the push of one button.
Yeah, well, we've just been talking about weaponizing a currency. It's basically doing the same thing. You've been obviously calling for sound money, this repatriation efforts, and the limits on the central bank power for over 15 years, Peter. I mean, long before it was politically fashionable. Has the mood shifted in Parliament and Germany more broadly? Are we entering a moment when the public finally starts questioning debasement and ECB policy and the need to return to monetary sovereignty?
Well, as a publicist, I've been writing about that since 2000, so it's even longer than 15 years, and I've been following that for that long. That was also more or less the time when social media and alternative media came up. We had an audience maybe of every 10,000 persons in the country listen to us for technical reasons because the platforms just were not yet there. That has changed, obviously. So many more people are listening to us. I think that at least 30 to 40% of the population in Canada, maybe even more than that, listen to alternative media. And many of them listen to monetary alternative media and maybe even gold sites like yours, like Kitco's. But it's still not so many, but it's a lot more than 25 years ago. So that's the good news. But when it comes to politics and to parliaments, well, no, those people, those members of parliament are not independent. I am really an exception here, and my party may be an exception, but we are still an opposition party, even though we are now the largest opposition party and are now at 23%. And actually, because we advocate stable currencies, that's one of the reasons, not the only one, but one of the reasons why we're demonized all the time. They're fighting with everything they have against us, including the courts. So we are behind Trump in that respect. I think in Canada, you're also still fighting against difficult powers. But yes, we're working on that. And gold is a political metal. It always has been. And as long as there is not an overall shift in politics, driven by really the people themselves to stable currency, well, this parliament will probably not switch to gold, to becoming gold bucks, and same for the central banks.
Okay, well said. And finally, before we let you go, I mean, for private investors watching this, especially those skeptical of fiat systems, what's the lessons from Germany's example? I mean, you know, you just mentioned you've been watching Kitco. We have a lot of gold bugs here. Is it simply if central banks are buying gold and repatriating it, maybe the rest of us should pay attention to, or is it a little bit more complicated than that?
No, you could put it like that. The public pressure was the reason why we had some success 15 years ago. So the public was watching, the public was influencing the parliament and ultimately the central bank. But of course, it works vice versa too. If the market driven by itself, be it only for greed, because if the gold price goes up like currently, everybody, even non-gold bucks, join that bandwagon because they want to participate. And if that happens, it has some effects back into politics. So all we can do is...
How much of it is about price? I mean, you know, we've been talking to a lot of analysts that say if all the central banks start buying even more than they are right now, which is still at record levels, I mean, this price will just go crazy. So they're trying to kind of keep it a little bit more stable. Do you think that's what's happening?
they're trying to, and don't forget, there's 3 or maybe I think these days even 4,000 tons of new mining production every year, and that's counted without recycling gold. So there is some inflation, if you want, in the gold market. Historically, some 230,000 tons have been mined. We have some 3,000 tons of new mining production. So there is some room to breathe for the central banks. They can buy some 2,000 or 3,000 tons a year, and that's a lot, without really they do not have to buy from the stockpiles. So they have a chance to take things slowly and let the price glide up slowly. The times when they were able to manipulate the price down via the paper gold market, and we've seen that for, I believe, 30 years, are over. Currently, this is no longer happening, but we're not yet at a point where the price is exploding. But in the long run, since 2000, it is a spectacular performance. So
will it keep going, Peter? Is it going to keep going?
Yes, that's what I wanted to say. That's what I wanted to say for you. Keep going. Keep up the good work of Kitco. Thank you very much for what you're doing. And even though this was the first time we were talking, Jeremy, I would appreciate if we could keep in contact.
Yeah, absolutely not the last. Peter Boehringer is a member of the German Bundestag. He's also the former chair of the Budget Committee and the man behind repatriation. Thank you for your leadership on these issues, for helping us understand the deeper shifts underway in global reserve policy. But as central banks rethink custody, currency, credibility, this repatriation movement, my friend, that you helped lead may prove to just be at the beginning. Thanks again for your time.
Thanks, and you all take care.
Appreciate your time. Thanks so much. We'll continue tracking how sovereign reserve strategics evolve and whether physical gold, not just financial assets, reclaim center stage in global finance. We got lots to come. For more interviews and real-time macro analysis, subscribe right here to Kitco News and visit kitco.com, where our team of journalists have you covered. I'm Jeremy Szafron. We'll see you next time.